Tempus AI taking the world by storm? Or is it just another flash in the pan stock before it crashes and burns? Or is it a stock for a lifetime? In today's video, we will discuss Tempus AI. We're going to have a look at what the company actually does in the business model. We're going to look at the IPO numbers and how that reflects the company at the moment. Look at the positive and negatives in terms of where the future growth is coming from. And then we'll have a deep dive into what is actually happening with the stock analysis and all the financials around this company. And if you stay right to the end of the video, I will give you the potential intrinsic value of Tempus AI. So let's get to it. Affinity and beyond. Yes, welcome guys and gals back to the channel. In this episode, we're going to talk about Tempus AI, the new startup that's come on board last year. Will it continue to grow like it has been, or is it time for it to disappear? You have just arrived back from outer space as you've traveled the speed of light as you fly towards making yourself a billionaire. Well, that's where we're aiming towards, so let's hope we can get there. But first of all, we need to have a look at what this Tempus AI is all about. And why not get rid of your 9-to-5 job and become a sit-at-home billionaire? Well, that is not exactly the case. Some people might want to have that, but you could do that and see it all disappear. You want to continue to grow. So it's about making multi-streams of income, and that's how you make your moolah. So let's get to it. What is Tempus AI? Well, in simple terms for the people out there, it is a company that integrates healthcare products using data that helps the clinician and the hospital systems make better decisions for them. So basically, you're looking at artificial intelligence that is precision for the medicine and patient care field. So anyone that is sick, they are trying to make life better and quicker, to give you quicker answers for what is needed. They have a application called Next, which hopefully they're hoping it's going to be the next best thing. Well, that's what you're hoping out there. Did you see what I did there? Yeah, get it? Yep, the Next, yes. Will Tempus AI be the stock you need to be buying in 2025? Potentially. But to find out more, let's have a look at the IPO and what happened there and what is currently happening in the business that is helping it to grow. Tempus AI went public, folks, on June 13th, 2024 at a pricing of $37, which exceeded their expectations as they shoot up to $6 billion valuation at IPO. But since then, they have more than doubled up, folks. Congratulations to you if you got involved early on, because it's great stuff. As always happens in IPO, they fly to the moon, you have a dip, and that is generally the best time, if it's a great company, to buy the stock. After the IPO, when it drops, buy it if you like it and just let it go from there. That is when you make the real moolah in any stock that is successful. But you can potentially make more money if the stock goes nearly to bankruptcy and then goes flying back up again. That has happened before as well. So there's stocks like Amazon you could have got for that sort of money, and look where you would be now. So there is always chances for some stocks to really fly. Whether you can get involved early enough, that is the question mark. That is the billion-dollar question. Because most of the time, it gets available on open market and not on the OTC. On the open market, it's a billion-dollar company plus. So that's the problem you have. Some stocks that you think could fly to the moon from lower down is having the access to it. In some countries, it's not there if you're not in America. So that is the question mark you have there. But yes, in terms of Tempus AI, AI, what do I think we need to see in the future of this company? What do we need to see? Well, we need to see some positive growth out there so it continues to grow. So what are they doing right now to produce positive growth? Well, first of all, you got to look at the business model. What's actually happening? Why are they making money? So positives, they are starting to get robust revenue growth, 33% on the year before. In the third quarter of 180 million, which is a surge up of 64% on the growth rate in the data and their service revenue. So that's very important. So currently there is strong demand for this company, but will it continue into the future? There is no guarantee of that, and that's when you've got to do more research, and that's why you're here. Number two, what I see for this company going forward, where it is a strategic acquisition and product expansion. Well, they recently acquired Ambry Genetics Corporation for $600 million. And when you get to the financials later, when you see the net loss has really gone boop in one quarter, it's because of this buy. So just think of that when you come to that in the future. You can write that off, but having that acquisition is important. Why was this acquisition good for this company? Well, simple as this. They want to speed up their analytics as well as getting more into the disease coverage space, understanding how diseases work. And this company already had more of the infrastructure than what they currently had. So acquiring it was able to make it more of a conglomerate as it goes forward. So that was a great buy. There's also their production of XM, a minimal residual disease and monetary assay, which they expect to be part of their global market push and get more and more customers involved that way outside of the US. So that's exciting stuff if they can bring their model to life and it actually works for the purpose that is needed and makes it easier for the clinicians that are using it. So that is the question mark going forward there. So that is a few positive steps for the company, the Tempus AI. But what are some of the negatives and what is hurting the bottom line? Yes, the bottom line of Tempus AI. What's hurting them right now? Well, let's have a look. With financial challenges and value concerns, that's what's happening. Despite impressive revenue numbers, as I just spoke about before, the reported net loss of $75 million and $22 million in stock compensation fix. Yes, indeed. And the valuation is over 15 times sales predictions of 2025. And this is just right now. When you got other stocks like Natera and Guardant Healthcare have much better comparables. But what you got to decide between these stocks is which one is actually going to grow more. That's what you got to look at. So, do you think the stock's going to continue to sky high, or is it going to plummet? Well, it's going to, like Beyond Meat is an example of going high to the moon and then crash, bang, wallop, and never recovers. Well, we will see. Another possible negative for this company is the operational and the regulatory risk around the healthcare system. They have high debt levels and negative earnings is not good. The company dependence on data collection and AI models, performance completed with the negatives happening out there with the challenges they have for their growth. So yeah, so basically what's happening here with this company here is their data analysis, yes, but they're in the healthcare space. They only got one space to go, but it's a big space. Don't get me wrong, it's a very big space and they can make a lot of money. But they haven't got into any other sectors as well. Can they find other ways to provide growth in this company by going to other sectors and pushing like the Palantirs and the likes? This is when you start looking at the real moolah for this company. If we can do that as well, then look out. But at the moment, they're just in the healthcare space, well, mainly in the healthcare space. So that's where the improvements can be for this stock going forward. So with all this said and done, when you've listened to most of the stuff so far, it looks pretty positive. So you should buy all day, right? No! No, you should not. You need to do more research. Just because there's a lot of positives, not much negatives, you got to look at the financial facts. That's what I'm here for. The stock analysis now. We're going to do a stock analysis. Have a look at all the financials, the return on invested capital, the revenue, the net profit or loss. We're looking at everything that's really important for this company to grow. Where's the PE ratio? What's happening? What's going to get it done? What is Tempus AI doing? Let's have a deep dive into this now. And right at the end of the video, after this, we will talk about the intrinsic value. Let's go. Well, yes, what is happening with Tempus AI? They're at the bottom of the ocean. Can they fly back up to the top? Well, they're actually not at the bottom of the ocean, but they've got a way to go to really push up to being a great stock. Let's have a look. Tempus AI is $85 a share, roughly at time of recording, with a 52-week price range of $22, folks. You could have got the stock at $22 after the IPO 37, and now it's at 85. And the highest has been is above 90. Wow, wow, wow. Congratulations to you if you bought IPO down to $22. Anywhere in that $40 range, you've doubled up. Fantastic. Will it continue? That is the $1 million question you've got to look at. And why it's maybe not the $1 million question, let's just have a look at a few things. Earnings per share is down minus 1.78. So they're not making any money. So there's no PE ratio, there's no dividend, there's nothing like that at the moment. Return on invested capital, negative 91%. So every dollar you put in, folks, you're losing 91 cents. That is where this company is at the moment. It's absolute debacle in that case. And does it deserve the rating it's getting? Well, I tell you what, when you get to the intrinsic value, you will know, but you should be able to guess. So no, 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 no. But is there some positives out there? Well, 157 million shares now. It's up 48% on last year, but that's not surprising because you had an IPO, so people are going to put as much shares into the market as possible to get their instant growth, and they'll continue to do that for a few years to come, I'd expect. But you'd expect that hopefully they'll turn it around when they start getting to profitability. So that's where you got to look into the future there. What else have we got here? So yeah, interesting to see what I saw with the analysts as well. The analysts went, they rate them about $52 to $74 a stock. I think they could be a little bit rich on current where they are at the moment. But let's have a look at the revenue and really get into the real juiciness now. This is where we really start to see what is actually happening out there in this world. Are they an opportunity to go bang or bust? So the revenue for the year, 640 million, up from 531 million the year before, and 320 million. So they've doubled up in 2 years. So that is pretty good, pretty impressive. If you look at it quarterly, it's a bit, they're slightly going up each quarter, which is good to see in the revenue side. But net profit, well, they're at a big loss, folks. 743 million for the year, 214 and 289. So now 289 million 2 years ago. So their net loss has gone up about 3x. So not good at all. And also you can see if you go to the quarterly, 75.8 million loss, but before they were 557 million. Woo! But remember, that was the acquisition. That's what you got to remember. Acquisition was done then. That's why that's gone astronomically, and why you've seen a big loss for the year. So you take that away from the loss, they actually have improved their net loss over the year. So just have a look at that twice, and maybe that gives you some reason for confidence. They've gone down each year. If you take the acquisition out, they've gone down each year. And then but to me, they need to accelerate it. It's a slow process. They need to go 50% down, something like that. They start doing that, then exciting. If they start getting some sort of positive in there, wooey! It's time to get get going. Well, let's now have a look at the balance sheet of this company here. Total assets of 971 million, up from 564. So, woo, they're really flying along there. And long-term debt, very, very high though. Long-term liabilities, 918 million, up from 840 million. So it's just about as high as the total assets. Not good for me as an investor, not how I like to invest. So now, and of course, and yeah, so free cash flow is minus 200 million. There you go, folks. Free cash flow. There is no free cash flow. They got a long way to go. So it looks all doom and gloom if you look at the financials compared to what we're talking about in other places. Is there a way out for this company? Is there a chance this company can prosper and go to the heights of the heights that it's expected to? Well, time will tell if the future gains are there. But let's now have a look at the intrinsic value of this company. I've done a pretty simple calculation. Look at share price. We're looking at earnings per share, the growth rate, with the bond yield to give you an intrinsic value. So I'll do a bear case, a base case, an optimal case, fly to the moon, and then out of this world, you got to be kidding me sort of numbers. So that's what I do. You could go even more out of this world, but this is just pretty much where we're at the moment with this company and see where it goes. So the current share price is $85. So this is my bear case, folks. Negative where we are right now, negative 1.78, the 10% growth rate. You're looking at negative $52, folks. Negative 52. If you invest right now, you are just throwing money at the fire. Right now, this stock is an absolute basket case. The base case, $85, and say it just gets the positive earnings per share, 0.1. At 10%, you're at a amazing $3. So absolutely, this stock right here, right now, has got a lot of future gains into it. But where is the actual prices right? So optimal is more like realistically where it's heading in the next 3 years or so, 3 to 5 years. $85, earnings per share of $1 at a 15% growth rate, which I think is where they should at least get to. You're still looking at a $40 stock. A $40 stock, folks. Like, seriously, this is just way overvalued by any metrics. You need to double, so you need the earnings per share basically at $2, folks, at the 15%, roughly, or even a bit higher, to look at it being fair value. But if you think it's going to fly to the moon, and we're going to see earnings per share of $3 and 20% growth, you'll be buying all day at $151. So that's where you got to expect it to go. Earnings per share up to $3 at 20%, which is, don't get me wrong, absolutely doable. And absolutely could be easy stock. And then earnings per share up to 5. This is just out of this world at 25%. It's probably not really out of this world. You could probably go a lot higher. But like, this is like consistent growth for that long. You're looking at a $300 stock. So a bit of queries around the stock, but right now it would be a no buy for me. Absolutely no buy for me. I'm not saying it's not going to be a good company, but I just don't see the fair value. The fair value probably was early on, but so you don't get into every stock when you need to. But that was a stock you need to buy early on with the IPO. For sure. Do I see it being a long-term champion? Well, the healthcare sector is a big sector. If they can develop and continue to grow, and then it could be a stock that goes very well. But if you look at the top companies, and they do a lot of things in the healthcare sector, they do a mixture of heaps of things, pharmaceutical, everything all put together. This company doesn't have that, so maybe there is a ceiling on how high this company will go and maybe better value out there. But anyway, that is Tempus AI, what's happening out there with their stock at the moment, stock analysis and intrinsic value. I hope you got some value out of this video. Remember to like and subscribe to the channel if you liked it. And I will be back with another video twice a week on this channel. Have an awesome day out there.